Welcome back to the Crypto World channel, everyone. My name is Josh, and right now Ethereum is potentially breaking below this important moving average, but we are also forming this brand new pattern right now that we need to be paying attention to. All of that and more in this video, so definitely stick around all the way to the end of this video so that you're not missing out on any of this important information. And just before we jump into it, make sure to leave a like down below, and if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight to what this video is about. So right here, on the Ethereum to US dollar chart on the 12-hour time frame. This was the previous falling wedge pattern that I have been talking about for the last couple weeks now on the channel. Obviously, we initially broke out to the upside, but ran into this exact point of resistance where we saw a rejection right down to this exact level of support coming in at approximately 3.7k, which is obviously good to see Ethereum holding above this descending line of previous resistance, now flipping into new support. But obviously, Ethereum has a long way to go before we really start flipping bullish again. For example, we still have these major points of resistance, which is the 38.2% Fibonacci level coming in at just above 4.1k, and the golden pocket coming in at approximately 4.4k. So those are just a few of the important levels that I'm paying attention to for Ethereum moving forward. But taking a look at this chart just here, this is still the 12-hour time frame for Ethereum, but what I've done is redraw that falling wedge pattern to fit in all of these support levels and all of these resistance levels. And despite having a few candle wicks outside of this pattern, this is still technically forming if you're paying attention to the candle bodies in particular, because obviously the recent Ethereum move over the past couple days has fit in perfectly with this pattern, and this descending line of resistance is currently coming in at just above 4,000 US dollars. And when it comes to falling wedge patterns, technically they are known as a bullish pattern just because around 7 times out of 10 they break to the upside, and about 3 times out of 10 they break to the downside. So even though they're technically more bullish than bearish, they're still not impossible to break to the downside. I want to make that clear. But really, if you want to play it safer, it's best to wait and see if we either break support or resistance to set up the next price target. For example, if we break above that point of resistance, then the technical price target for this pattern is coming in towards the top of the wedge, which is currently coming in at around 4.7k. So this is something that I am keeping an eye on right now, and I will be updating you on it as time goes on. And speaking about wedges, heading over to the 4-hour chart for Ethereum, we've got that rising wedge pattern, which is now technically fully played out. So now these two patterns are fully invalidated because, of course, we broke below this important line just here, invalidating the symmetrical triangle pattern. And as I just mentioned, we already fully played out the rising wedge pattern, hitting the price target, which was coming in at around 3.8k approximately. And just bringing out the price oscillators, what we can see here is the 4-hour RSI currently sitting in oversold territories, which for the beginners out there basically just means the price moved too far to the downside too quickly. And so quite often this can mean that Ethereum is about to experience some sort of bounce, like what we saw the last time Ethereum entered into oversold territories on the 4-hour RSI, which was towards the beginning of this month when we had that flash crash to the downside. And obviously Ethereum had a pretty significant bounce immediately after that. Another good sign to see here for Ethereum holders, at least at the time of filming this video, we have currently formed a nice wick to the downside on this pullback, which is also in the same sort of price range as all of these other wicks that we have seen for Ethereum over the past few weeks. So what does that mean for Ethereum? Well, it means that Ethereum is not spending much time at these sort of prices, meaning that there is a decent amount of buyers here that are quickly buying up Ethereum every time we drop into this price range, at least so far. And by the way, this range that we're talking about is in between around 3,650 and around 3,750. So in that $100 price range is a decent amount of support for Ethereum, as we have been proving over the past couple of weeks. And that also comes in confluence with this important Ethereum chart. This is the daily time frame for Ethereum, and what we have is the 20-week simple moving average and just a horizontal line of support. First of all, this horizontal line of support is coming in at around 3,650, and I have been mentioning that same level of support for over a week now, because as I just mentioned, we've already recently found support at around that sort of price. But also looking further back on the chart, you'll notice that we have found resistance at that exact point previously, and anytime we break above an important level of resistance, that usually flips into new support, as we have been experiencing. And then looking at the 20-week simple moving average, that is currently coming in at just above 3.8k, and you can see here that that was the moving average that Ethereum bottomed out at during the September correction. On top of that, over the past 1 to 2 weeks, we have been finding a decent amount of support at this exact moving average. And zooming even further out on the chart, we've found huge amounts of confluence around this moving average back during the middle of this year. So right now, at least at the time of filming this video, we are currently trading below this moving average. But considering the fact that this is a weekly moving average, we really need to see a weekly candle close below the moving average in order to confirm a break below, which as of right now, we have currently not seen that. But if we do end up seeing a weekly candle close below the 20-week SMA and a major break below it, then that could send Ethereum into another situation similar to the middle of this year, back when we broke below this moving average during during June, and then in early July, Ethereum found perfect resistance along this exact moving average, and we didn't flip really bullish again until we started breaking back above this moving average entering into August. So basically, as we confirmed a break below this moving average, we played out some more short-term bearish price action, but really over the next 1 month approximately, it was mostly sideways price action, give or take. And overall, if you're looking at the big picture, that turned out to be a great buying opportunity if you're simply dollar cost averaging into the market. And right now, that is my current Ethereum strategy. Obviously, that's not financial advice, that's just telling you what I am currently doing. And staying on the daily time frame for Ethereum, we have this line of previous resistance now acting as support, and that is coming in at around 3,650. So this line just adds to the importance of that 3,650 price level. Now taking a quick look at Ethereum versus Bitcoin here on the 6-hour time frame, of course we've got that same head and shoulders pattern that I have been talking about over the past couple of days. And right now, if you're looking in the immediate short term, at least at the time from this video, Ethereum is on the edge of breaking below this neckline. Now we haven't really seen a lot of confirmation of the break below that neckline, but anyway, the line is coming in at around 0.0794 Bitcoin per Ethereum. So technically speaking, if we're below that line, that is bearish, and above the line, that is bullish. And taking a look at the technical price target for this pattern, if we do end up confirming a break below the neckline, the technical price target is coming in at approximately 0.07 Bitcoin per Ethereum, which from where we are right now at the time from this video to that price target is around an 11% pullback for Ethereum against Bitcoin, which if that does end up playing out, that just basically means Ethereum would be underperforming against Bitcoin. But an 11% pullback on this chart doesn't necessarily translate to an 11% pullback for Ethereum against the US dollar. And something else to keep in mind is the fact that we've previously formed head and shoulders patterns on this chart and fell short of the price target. So even though that is a technical price target, of course, nothing is guaranteed in these markets, which is why my current Ethereum strategy is simply to slowly dollar cost average into Ethereum, especially as the price goes any lower, because it is only a matter of time before we experience more bullish price action later on. And by the way, if you want to get extra crypto updates and pieces of information like this throughout the day, make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. If you got anything of value out of this video, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on so that you do not miss out on any of these future updates that I post every single day. And before you click off, make sure you're checking out one of these uploads if you haven't already. I've got a full Bybit tutorial video and another video here showing you how I earn passive income every day on my crypto holdings. But anyway, that is everything that I have to say for today. I really hope you enjoyed it, and I'll see you all in the next video.